Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we are going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with the price action and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it is the first place that we go to notify you of the ins and the outs of everything that is going on in the crypto space. Well worth checking it out. I don't think you'll be disappointed by what you find down there. Okay, let's jump down into this. It can be a little bit of a minefield with lots of kind of different colored lines, lots of ABC structures, 1 through 5 structures. Can be a little bit confusing at times. In our Discord server, in the general channel, general chat channel, there is a 181-page PDF document that details out how to understand Elliott-Wave theory. It is a reasonably complex theory, and it's basically all about tracking the psychology of buyers and sellers in the market. And yeah, it's 181 pages. It's well worth a read. It can be a little bit complicated, which is why I created the video course, but again, that's not for everyone either. So check it out. I said, join us in Discord and we can talk a little bit more about kind of Elliott-Wave theory there. But in this video, I obviously am going to be applying it. It is the theory that I like to kind of rely on when it comes to trading. It works time and time again, specifically if you actually implement it correctly. There's unfortunately a lot of people who do not implement it correctly because it is reasonably complicated, as I said. So just kind of bear that in mind. I'm not going to get every single one of these right as I do them because it is complex. But, you know, I'd like to try to make sure that I get it as accurate as I possibly can. And if you do read the PDF and you get an understanding as to, you know, how to kind of read Elliott-Wave theory, then obviously you'll understand why sometimes it is a little bit more complicated. But let's jump down into this, okay, and we'll talk about it as we kind of go. So Bitcoin paired up with USDT on the hourly chart, and Binance is our data source, right? Now, as you can kind of see, I have this C-wave high point up here, and I have labeled this a supply zone. There are obviously a couple of other supply zones here, as well as a couple of demand zones. Now, this is a bit of a mixture, right? We've got the Elliott waves, which are the lines that you're seeing getting drawn all over the place, and then these yellow boxes are something that's kind of been adopted from smart money concepts, if you're familiar. Again, it's another kind of theory that I think is, let's say theory. Yeah, I guess it is a kind of a theory. It tracks smart money, or was supposed to be smart money. It's institutional players and where the liquidity is and where the sellers are and where the buyers are and that kind of stuff. Break of structures and fair value gaps, all that kind of usual stuff that you're probably familiar with if you're familiar with smart money concepts. Now, you put Elliott-Wave theory and smart money concepts together, you end up in a pretty reasonable position and seeing the charts in a slightly different way than you might with just drawing a couple of random trend lines on the chart. So although this looks complicated, it's actually not. It's really quite simple. When you understand what both of these things are doing, and you put the two things together and you end up with some really cool stuff. So as we're talking about on Twitch this morning, it does look like we have this kind of three-wave structural move to the downside, almost like a sideways trade. Now, there are a couple of other things that could be in play here. If I draw a trend line in, and we can actually draw this out from the bottom as well, we could potentially be seeing some kind of triangular wedge pattern in here. I don't think that's necessarily what's going to play out because Elliott-Wave theory tells us that we're probably going to have to move down into this low here, and we haven't yet done it. We can also see in here there's another little kind of wedge pattern just forming. Again, this is one of the reasons that I don't tend to like trend lines too much, is that depending on the person who draws them, they're going to draw them differently. They're going to be all over the place in lots of different areas. So again, I try to refrain from doing these unless they're really, really important. So for the most part, I look at this as a sideways trade with the requirement to come and revisit our demand area down here. Now, I think we're going to have to come down into this range anywhere between 16,617, 16,651. Okay, and you know, with that being said, it's not a guarantee that we do this because we have already visited this area right here. Okay, so we could actually mark this as complete by taking a look at this as a three-wave drop right in here instead. I'm just not confident in thinking that it should be that quick in the way that it's moved. Now, Elliott-Wave theory doesn't do timing, so it's possible that this is the low that I'm expecting to happen again over this side, and it's already happened, and we actually now move on up. And the reason for this is there's also another count here, and this count actually runs from this high to this low from our existing low over here, showing us with a ABC structure like this, just taking us up towards 16,000 𝗕𝗘𝗪𝗠𝗠𝗘𝗧 right up there, right? So this is something else that's also potentially in play, and we don't really have a way of filtering this out, which one of these is correct at the moment, mainly because we don't have that break of structure from smart money concepts. So it does look like we still have this potential theoretical move to the upside here, and we aren't really going to get confirmation until we break up higher than a couple of these wicks that are already in here. Now, as I said, this is the supply area, and so far it's holding up to its name. This is where the sellers are, and we can see that right in here. Lots of selling pressure all up in this area here. So the idea of breaking right the way through this area is going to be tough. Not impossible, but very, very tough nonetheless. And as we kind of reflect on this a little bit, we have to see that a lot of sell orders have already been hit in here, that eventually we are going to chew through all of them, and we will eventually break on through if we keep retesting it. So I do think that there is a bigger play here where we do end up moving up higher. I'm just not confident that it's happening just yet. And in fact, I do think that we are likely to come down to our demand area and hit a B wave low point. Okay, so we have our A wave up here. We have our C wave up here. Okay, so this is all complete, and we are looking for this move down. And if we reflect on this, we can then see that we have this potential structure coming in, taking us into this low point over here as well. So yeah, it could be done at this low already, and we could be rallying up. I'm just not expecting that. I would expect us to kind of move on down. And at the moment, there could just be a little bit of a liquidity grab, but I won't rule out the $16,800 high before we have a move down either. Okay, so very, very much a sideways trade right inside this little wedge area here between these two zones, and it is tight. It's between 16,650, and then up here at 16,730. So we're kind of wedged in this sideways trade. Ranging markets, we try to avoid them. They're hard to predict. So yeah, we'll have to see which way this breaks. Once we get that confirmation, then we'll be able to trade accordingly. So just be aware that it's not an ideal situation to be in. Now, as we kind of scale this out a little bit, we can, of course, take a look at the bigger expectation, which is to come up into our higher sell zone, okay, our supply zone. This is where the other sellers are going to be lining up as well, and maybe people who were buying down here on the breakout of some of these other areas. So for the most part, yeah, I'm still expecting this move slightly higher. Now, as I scale this back down again, it is a little short of our higher range. Our higher range comes up here at 17,274 to 17,447. So the expected range at the moment is between 17,080 and 17,126. So it is a little bit short, and I was actually expecting this B wave movement to hit into this higher range because I think this is where the majority of sellers are actually going to be. That being said, if we do complete this C wave up higher, and we have that subwave C up here as well, this would be an end of structure, and I would start to think about that move down towards the 15k area. So essentially, as we kind of reflect on all of these kind of areas that we've been kind of ranging in for quite some time, because that's exactly what we have been doing, we've just been in a sideways trading motion here for quite some time. We should reflect on the fact that this is a continuation pattern, and the continuation will eventually, continue essentially, right? And we went down into this move, so we came down, we go sideways during this entire movement, and then we have to break on back down again, completing the continuation pattern and allowing the traders to continue dragging that price down. So essentially, it does look like we still have to move down. And again, as I scale out even further on this, I did this the other day, you can see that this would just be a completion of an ABC structure. At this point, I would expect another ABC structure coming back up into our ranging market, and then potentially another breakdown from here, taking us down into those new lower lows. And again, this will be somewhere in that kind of $13,000 to $14,000 range. Okay, so essentially, as we kind of layer on all of these kind of movements and the kind of tracking all the various different elements to this, all the way from those smaller movements all the way into these larger movements, we can, of course, appreciate that there is still a lot of work to be done here for Bitcoin. None of this is going to be quick. You don't instantaneously go to the moon just because a couple of retail investors have been purchasing up. And on that note, we should probably hit the correct button. If I can, there we go. So we should probably talk about the inflows and the outflows for BTC. Okay, now here we can see that the amount of inflows of Bitcoin going onto the exchanges is being met by the equal amounts of demand. And we actually should probably flip that terminology a little bit. The demand is being equally met by the supply, and that is a much better way of actually taking stock of the current situation. Some retail investors have come in and they're looking to accumulate. And at the same time as that is happening, you've got some sellers coming in willing to sell them the BTC. Now we can take a look at the wallet counts and we can take a look at who's been buying and who has been selling. And at the moment, we can see that it's retail investors that have been coming in here looking to accumulate. Okay, we definitely see that from the 0.1 BTC holders and the 1 BTC holders. Not so much on the 10 BTC, but definitely on the lower side. So the smaller retail investors have been looking to accumulate a little bit. Now, with that being said, sometimes that's a fantastic strategy, and it's great to be able to see small retail investors, taking advantage of the situation. However, we also have to take stock of who's been selling them this Bitcoin, because that's also a very important piece of the puzzle. And when we start taking a look at the larger wallets, it's very clear to see that the larger whale investors are the ones that are selling to the Bitcoin holders, currently the retail investors. And what we mean by this is that large money or big money is basically using retail to exit their positions. And this is a bit of a strategy that we see from time and time again. There's loads of different kind of memes about it out on the internet these days, where you see the whale investors deliberately selling at losses, just trying to drag that price down lower, okay? Because there's not terribly too much demand from the retail at the moment. And eventually when it all dries up, the price continues to just tumble down. So no big money is really coming in here, and big money isn't going to start coming in here until those smaller retail investors are going to become sellers. So when they start selling, that's where the whales will start buying. And what we're looking for, we're looking for these whale investors, these large institutional big money players, to come in and scoop up a lot of really cheap Bitcoin. Okay, they've been selling on retail for close to a year now, and that hasn't changed. There's nothing here that's looking like it's going to change anytime soon. It's not going to change until, of course, they've got something to buy, and they're not going to be buying at these prices whilst retail is continuing to accumulate. So I suspect that there's going to be further downside. So at the moment, we have all these kind of small kind of movements on these kind of hourly charts, but there's nothing really major going on here when we take a look at it from a bigger point of view, and we take stock of the current situation when it comes to who actually has the money to move the market and who doesn't. Don't get me wrong. I think that, 4 million krill, which are in here as our 0.1 BTC holders, there are currently 4.2 million of them. They have a power together collaboratively to move a market, but retail doesn't generally work together very well. So unless they were all going to dump on the market all at once, for example, would they actually start to be able to move the market? So just be really aware that large institutional players are the ones that are trying to find liquidity in this bear market. They're hunting for it, and they're tricking retail investors into kind of buying up their Bitcoin, right? And then they're going to look for those same retail investors to sell back to them at a cheaper rate. That will happen, somewhere down the line. I don't know if it's going to be 3 months. I don't know if it's going to be 6 months. I don't know if it's going to be even in 2023, but I'm keeping an eye on it. And I do think it's very important that retail investors starts to wise up to where the money is going, who is buying, who is selling, and what is actually going on behind the scenes. So all of this does have an impact on the price action. And, we can see these small movements to the upside. These are all fine. But as we start to scale out, we start to really take stock of the situation, all the analysis that we have done on this channel, and where it is pointing us towards. So yeah, I'm going to leave this video right there. Let me know your thoughts in the comments down below. If you have appreciated it, smash the like button. I appreciate that. If you're new to the channel, subscribe. Stay up to date with everything. Join us down in Discord, linked in the description below. Guys, until the next one, have a fantastic day.